splendid evening it is to you viewers. Welcome to Special Focus, right on Equity Access, your aerial perspective on stock market developments and on developments in the Zimbabwean economy. Ibn Mabunda signing in. Let's go. On agenda tonight, the Ministry of Mines and Mineral Development has set a gold output target at 40 tons for the year 2019. In the year 2018, a target of 30 tons was set. While it was then upwardly revised to 34 tons, we fell short of that at 33.2 tons. Question is, can we reach 40 tons? Gold is Zimbabwe's largest forex earner, raking in 28% of our exports in 2018 at a figure of 1.2 billion. That was 20% up from 1 billion in the year 2017. Well, the higher target is, of course, an attempt to get Zimbabwe out of the trade deficit that we're currently in, sitting at $2.5 billion. Hence, the initiative to look at setting a higher target in the year 2019. But the question remains, are we in a position to reach that 40-ton target? A quick look at the stats. Well, over the past 5 years, Zimbabwe has been able to achieve a cumulative growth of 17%. Right, this is the 2018 figure that we achieved, 33.2 tons. If we continue on that trajectory, that would mean for 2019 we can be able to reach 38.8 tons, not the 40-ton target. However, it should be noted that the figures that we have in the last quarter of 2018 are a bit worrying. There was a 119% decline from 11 tons in the third quarter down to 5 tons in the last quarter. Why was that? Well, very simple. Macroeconomic issues. 1, inflation. 2, issues to do with the exchange rate between the bond and the US dollar, which is currently pegged at 1:1, against a gold remittance figure of 55%, which has made it difficult for the miners to actually get to engage in business with the government. That being said, if this trend were to continue, this would spell a decline in as far as that is concerned in 2019. This would be reminiscent, of course, of what we've witnessed in the past. In the year 2008, we had a similar situation where we had inflation as well as harsh macroeconomic conditions that saw us have an all-time decline of gold to 3.6 tons for the whole year. Now, if we are to continue with that definitely will not get us to 40 tons, but obviously to a decline. So perhaps we're looking at an average of maybe 2 tons per month and possibly 24, but definitely not a 40-ton target that has been set by government. Elsewhere, the Zimbabwe Stock Exchange issued a statement this morning toward the suspension of Falcon Gold from the Zimbabwe Stock Exchange. Issue being, well, they have not been able to publish the financial results for the period ended 30 September 2018 within the stipulated time frame. As a result, they have been suspended. Well, of course, this comes not as a surprise. On the 20th of December, the corporation issued a cautionary statement which highlighted the challenges that the company is facing. They have been facing challenges to do with financing in order for them to stay operational. At the same time, they have forex issues to do with their ability to pay their creditors for them to stay in business. So this, of course, does not come to us as a surprise. It would also be interesting to note that over the past 5 years, the corporation has been performing quite badly. Let's have a quick look at the stats. Well, over the past 5 years, they have been recording losses. That's 2013, where they recorded losses of $12.6 million, 2015, $2 million, as well as 2017, $5.2 million in as far as losses are concerned. In 2013, the corporation shut down its mine in Chakari there, which eventually they sold to Riozim in the year 2016 for a price of $8 million, and that was, of course, Downey Mine. In 2015, they also sold a 62.5% stake in Venice Mine to an undisclosed acquirer for a price of $4.4 million. These, of course, were attempts to get the business back from the red into the black. But it seems this has not yielded any fruits to this point, hence the suspension. I do hope that things will turn on a different leaf for the corporation. Elsewhere, PPC, Zimbabwe's largest cement producer with a dual listing on the Johannesburg Stock Exchange as well as the Zimbabwe Stock Exchange, released a third quarterly report for the period 31 December 2018. Interesting statistics released along with that. Regional prices of cement have increased 2%, which of course has impacted on their revenues, which declined 3%. Of note as well is that they are fighting against a market contraction of 5%. Just a sneak peek into their half-year performance. Well, their revenue there coming off due to a decline in as far as the growth of the South African economy is concerned. Well, Zimbabwe in the green, of course, the liquidity issues, but the company has been able to generate positive in terms of revenue growth in Zimbabwe. And on to revenue contribution over the past period, Southern African cement contributing 50%, the rest of Africa 30%, as well as materials they're posting 20%. The EBITDA, South Africa slumping 35%, Zimbabwe gaining 42% over the period in question. Then this one is an interesting one because it speaks to the forex issues prevailing in Zimbabwe. The group says that 56% of its cash resources in the period half year to 2018 was locked up in Zimbabwe. That has gone up to 80% over the half year 2019. Well, for conversation on these and other issues, I'm joined in studio by our very own Chief Analyst at Equity Access, Respect Gwenzi. Respect, good evening and welcome to the show.
Thank you. It's always my pleasure.
Splendid. Let's get on to it. A gold target set there at 40 tons. Is this achievable?
Yeah, I think I agree with your prognosis of that forecast to say 40 tons might be far-fetched. I mean, we're coming from 33.2 thereabout in terms of 2018 production. And my thinking and my own projection is that we've had quite some macroeconomic challenges late into the 2018 full year, and production statistics have shown a dip, and I think that's quite fundamental. It's not just a once-off decline. So what I think is that we are likely to see a further tapering off in terms of production getting into 2019, and as a full year, unless if there are any serious currency reforms, then we may start to see a shift in that trend. So I believe we'll even come off the 33 ton target, or the 33 ton achieved in 2018. I believe we'll fetch somewhere just close to 30 tons, but definitely not above last year, and also way off below the 40 tons that we are currently targeting. I think this has mainly to do with the currency issues at play. Miners are offered 55% of their produce in hard currency, and the difference is extended in terms of the local money. So looking at what has happened in the last 3 months, you can see that producers, they are either undercutting production or they're side marketing production. As you can see, small scale miners there coming off sharply from 2.8 and in fact 3 tons in August to just 1.1 and even 0.6 in November. That trend shows you that the small scale miners are opting to sell their produce elsewhere. And as for the primary producers, their produce has been a bit stable, but also getting into the final quarter of the year, there's been a slump in terms of their produce. When you utilize a 1:1 exchange rate, and then you offer the producers their money in local money terms, what you're essentially doing is you're discounting their produce, you're discounting their receipts, and this results in a serious value loss, given that bond notes or the local money equivalent has come down by about 75% in terms of real value compared to the US dollar. So they are clearly being undercut, and they're taking a stance to reduce their produce or to understate their produce or to side market, and this is likely to continue into 2019. So 40 tons is really far-fetched unless we solve the currency issues at stake.
Okay. What then can we do? I mean, if this trend continues into 2019, that spells disaster for Zimbabwe in terms of our trade balance position. What then could we do in the interim to try and solve this? I'd like to call it a crisis.
Yeah, we have the capacity in terms of production capacity, although most of the players are now decrying that some of their equipment is outdated. I believe that we readily have capacity to produce even 50 tons per annum. But the challenge that we are facing at the moment is that miners feel shortchanged. So this, as I have stated, it's a currency crisis. So to solve this crisis, we have to address the amount that's given to, we have to address the currency issue. And once we kind of put a free market system at play, when the exchange rate is floated to some extent, we might see an improvement because there's an open market trade in the of the USD, which miners do earn from their produce. So I think it can only be solved by solving the currency crisis, the currency problem. Once miners feel that there is a functional exchange rate system that compensate them, I mean, in real terms for their produce, then we might start to see a growth in terms of those numbers. That's how I feel we can, the only way to correct that problem.
Okay, progressing, but still in the same subject. Falcon Gold has been suspended from the Zimbabwe Stock Exchange. What is the significance of that?
I feel it's been coming. All this while, the company has been struggling at operating performance. They've never really produced a profit, a net positive profit position. And over the past 3 years, production and also even the actual numbers have been coming off. That really shows you that the company has been struggling. It has been disposing some of its assets, hoping that they could possibly cushion their cash flow position so as to drive the top line through increasing production capacity and also improving on their equipment and efficiencies thereabout. But it has not been so. They sold 2 mines over the past few years, but still they find themselves in that deep crisis where revenue continue to plummet, and they are still in that sustained loss position. So over the past few months, they have come out rightly and said, we are struggling to access Forex, we're struggling to buy equipment to retool, and so this has contributed to some of their financial losses. But as of the crisis that they face at hand, failure to report their results on time, the ZSC has got a stipulated 3 months time against which, I mean, after the year end, each financial year end, a company has to report its results within the next 3 months. So we have gone through those 3 months, which elapsed in December. So they just have to shape up, or maybe just ship out if they feel that there is a significant pressure in terms of demands by the authorities. But this speaks to...
My question to you would be, what is the possibility of them shaping up?
I don't see them managing to source funding from outside to meet some of the challenges that they're facing in terms of operations. But in terms of books, I mean, this is just an accounting, and they simply have to provide the books because they are a listed company. They owe it to investors to release that information, and they should do so. Despite that, there's some things that happened within the 2018 financial year which might have been hard to account for, which is one of the excuses that they're giving. But I believe that it's the right of the investor to know how the company has performed, and they should really shape up. So in terms of that, I'm sure they're going to release the results soon. But in terms of operational performance, I don't think they are going to shape up anytime soon. I don't think they have the capacity to raise the funding from offshore. Although Falcon Gold is connected to some of the AIM companies, and they have an exposure in London as well. But I don't think they have an attractive case to sell to the broader investment community.
Okay. Progressing. Let's talk about PPC Cement. The dual listed on JSE as well as the Zimbabwe Stock Exchange. They are releasing their third quarterly report for the period 31 December 2018. Of course, they have highlighted increases in terms of the price of cement against a market contraction of 5%. What do the figures mean?
When you look at PPC, PPC is structured in such a way that 50% of the company's business is generated by the South African operation. They contribute about 50% to the top line. And so South Africa has been struggling over the past few years. GDP has been coming off, slow growth in certain sectors, the key retail sectors and so forth. So demand has been coming off against that. But also, inflation has started to crop up in South Africa as well. So the company has managed to increase volumes over the past few months, and that has allowed for them to cushion the decline in volumes, because volumes did come off by between 2 and 3%. So essentially, South Africa's performance has been flat due to those discrepancies in terms of both revenue and both in terms of price and volumes. I think this chart here, in terms of contribution, quite shows us where South Africa sit and where the rest of Africa sits. But when you are to zoom in now in terms of the rest of Africa, this one is a half-year performance, but we're coming into the third quarter, which is the period succeeding these financials. But they pretty much tell us the story in terms of where the company is coming from and where it is going. So Zimbabwe comes into the matrix as well as one of the regional. In fact, Zimbabwe has got the highest capacity in terms of production after South Africa, and having a 1.4 million operating base in terms of cement tonnage, it comes in second following to South Africa. And although there has been growth over the past few years, that growth now seems to have subsided. Why? Because of certain macroeconomic challenges that the economy is facing. Failure to remit money, failure to source inputs from outside because of forex challenges, and of late, demand is expected to taper off after the whole austerity exercises. And they have mentioned that 60% of their resources are tied up in Zimbabwe, so they might not be in a position to keep on investing in that market again. So I think when you look at PPC elsewhere, in terms of market share, they are the largest. They have got the largest capacity in Zim at 1.4, followed by Lafarge and then Lifestyle and Sinozim. It's critical to note that ever since these guys came to Harare, they have been able to capture a higher market share. And if you looked at Lafarge's latest results, the company is struggling. It has recently restructured, trying to bring back their operating performance to levels that are, that position it for growth. So I think going forward, PPC is likely to exert its influence, leveraging on the best, on the expands best, and Zim has got a lot of infrastructure backlog, and we are likely to see more in terms of construction activities, infrastructure in the next few years, and PPC is rightly positioned. But these challenges around currency, the challenges around demand and inflation and so forth, they're likely to weigh on Zim. They have mentioned that in Zimbabwe, they have increased remuneration, employees' remuneration in line with inflation. And that is likely to impact their costs. And this will definitely impact their EBITDA, which is their operating performance. But then they are also saying we might increase efficiencies in that market. But to increase efficiencies, you need to also look at production. When you increase production, you reduce the cost per item. So that might fail. They might fail to achieve that on a sustainable basis. Although they said in this past quarter, they achieved growth, which is single digit, coming from double digit. But as we go forward, that growth may actually vanish. And when that growth is no longer realized, it means your efficiencies are also reduced. And it might end up affecting that operating performance position. So I think it's a mixed bag of performance at the overall group level. DRC is struggling. There's been recent political instability, so they've failed to really find new business and new infrastructure business in that market, and they're now engaging creditors as well, because the plant in DRC was funded by external credit, and they need to repay that. So they're now trying to restructure that debt and to ask for lengthening of periods, given that that market is not performing as expected.
Very quickly, since you mentioned the performance going north, in Ethiopia, they have a strengthening market share in terms of their subsidiary there, and their market share now is at about 10%. What could be the implication of that?
Yeah, Ethiopia is quite a small market. I think it's one of the smallest within the group. Yeah, in terms of market share, it's been expanding, but at a very slow rate.
Okay.
I think of what Ethiopia as well is a country which is infested with political instability, and they've been failing to expand at the rate at which they want to. But going forward, it's likely to increase in terms of market share as well as operating. I think in terms of capacity utilization, sitting at about 40%. So there's still growth potential, and once the country re-emerges as a pure democracy where, you know, there's less political instability, then we might likely to see an expansion of that market. But I think Rwanda is one of the interesting stories around the unit, around the group. They've been expanding over the years, and that performance is likely to be sustained. So broadly, PPC is a mixed bag. We've got South Africa, which is struggling with prices and the economy as well, not yet back on rails, although there's been an improvement over the past few months. And we've got Zimbabwe, which has got potential, but suffering from the crisis to do with currency and all that. And then we've got Rwanda, which of course is growing, DRC and Ethiopia, political instability. So that sums up the group, but it's really quite a good investment. There's a lot of prospective investors trying to come into the to snatch up a controlling stake in that company. Recently, Lafarge Holcim, which is the parent company to Lafarge Zimbabwe, it upped its bid price for the PPC asset. And over the past years, Dangote has shown interest, and even other international guys. Why? The background being that these guys have had leverage issues as well. They had a higher debt issue, and so they were looking for new capital. And recently, their performance has been coming back. So it's really a good improvement that they've shown over the past few years.
Well, given the issues that you just highlighted, it would be interesting to see whether the net profit position will be maintained or defended going forward. I know we're looking forward to a 31 March year end, and let's see how that actually plays out.
Sure.
And then lastly, from Newswire, of course, at a hearing of the UK's International Development Committee, Foreign Secretary Harriet Baldwin says, after the recent violent army crackdown, it will be difficult for Britain to back Zimbabwe's debt arrears clearance plan or to support its Commonwealth readmission. What are the ramifications of this?
I think our international re-engagement strategy has really foiled, and this comes essentially post the recent what do you call it?
Shutdown, demonstrations,
exactly,
as well as the violence.
Demonstrations that were preceded by violence, and I think we have lost the plot in terms of our re-engagement efforts. UK has been at the forefront of trying to push Zim's agenda to the Commonwealth and to the global world to say Zimbabwe is now reformed, and they were ready to vote for us. But now, given the August 1 violence that followed after the elections, and now the 2 weeks of disturbances, serious disturbances, where the Zimbabwe National Army as well as the ZRP were alleged to have led a retribution of sort on protesters in the slums. I think there's been a bold stance right across the world to say Zimbabwe has gone rogue again, or in fact it has always been rogue, and now we have to treat it accordingly. And there's been talk at this engagement today in London to say we are considering putting more sanctions on Zimbabwe, but only in a way that's limited to targeted sanctions where individuals can be added to the list. I think some of the people who were giving evidence to the group highlighted that sanctions have generally had a negative impact on Zimbabwe. I mean, the broader sanctions. So therefore, recommending more of targeted sanctions.
Right.
But in terms of our efforts to re-engage, seek a debt clearance plan and so forth, I think we are now back on zero footing, and that might change a whole lot of mix in terms of how government approaches the whole economic management plan, because the re-engagement was critical in terms of our ability to repay some of the outstanding arrears. Now that there is no longer that cushion, there's no longer that support from the people that were supporting us previously, it might mean we are in it alone, and we might even fail to come up with a plan to clear our debt, of which debt clearance is critical in terms of our national economic reconstruction.
Right.
And it's all a sham, but we'll see how it goes.
And then lastly, the monetary policy statement. Why the delay?
It's still within the time that's stipulated. I think we're expecting it late last week, but the time, according to constitution, according to the law, is still within time. We still have got a couple of days to go before it's released. But there's been speculation. Everyone is no longer patient, because we expect something to happen. Our dollars are losing value every single day. But I think it's also far-fetched to expect anything beyond the status quo. Why? Because every other statement that has come from the monetary policy of October to the fiscal policy of November, there's been no solutions to the current crisis. The guys seem to have been set on a platform where they say, let's solve the fiscus first and let then the monetary leg come in at a later stage. But things might change this time around. There's been drastic value loss, sustained pressure in terms of prices, and so people are just speculating on a currency that might come to play. And I believe I'm one of those people who believe there might be a fundamental shift in terms of the currency regime, in the next few days as the governor presents his monetary policy. It's a story for another day to discuss what kind of measures or policy measures or currency reforms that they might bring on course. But definitely we really expect something. We're confident that they might bring something fundamental, not those piecemeal gaps to close one or two things. I think it's going to be a real currency reform and a shift from the status quo.
Well, thank you, Respect, for the insights. Thank you, Zimbabwe, for staying with us. Don't forget to like, subscribe, follow us on Twitter, Facebook, and to visit our website, www.equityaccess.net. From Respect and I, thank you and adios. Splendid evening it is to your viewers. Welcome to Special Focus, right on Equity Access, your area of perspective on stock market developments and on developments in the Zimbabwean economy.